Jobless claims just hit their lowest level since 1969. The Schiller PE ratio is sitting at territory we've only seen once before in history, and the Fed just held rates in a meeting where 3 of its own members voted against. If you're buying or selling a home in Kent, Ottawa, or Muskegon County right now, all 3 of those headlines land on your closing table. Let's break it down. Welcome back to West Michigan Real Estate Adventures. I'm Craig Davis with Epic Realty, and every week I break down the national numbers that make headlines and the local numbers that actually move your home value. This week, we've got the Fed, Wall Street's favorite valuation guide, a historic jobs report, and fresh numbers out of our 3 counties. Let's get into it. Quick ask before we dive in. If this is your first time here, hit the subscribe button down below so these reports land in your feed every week. And if you find one number in here useful, tap that thumbs up button. It genuinely helps this channel reach more West Michigan buyers and sellers. Last Wednesday, the Federal Reserve held its benchmark rate steady at 3.5 to 3.75%. This is the 5th straight meeting without a move. Normally, that's a non-event. This one wasn't. 3 Fed officials broke ranks and pushed for a hike instead. The chairman, Kevin Warsh, called it a good family fight. Markets didn't love the uncertainty. The Dow dropped over 1,150 points that day, and the 30-year Treasury yield jumped to its highest level since 2007. That 30-year yield matters more to us than the Fed's fund rate does, because it's a bigger driver of long-term mortgage pricing. Peter Schiff has been hammering one theme all year, that the Fed is fighting a battle it's already lost on the math, and that a U.S. debt crisis is brewing that he says could be worse than 2008. He's pointed to interest expense on federal debt running near $1.6 trillion annualized. That's roughly 30% of all tax revenue just going to the interest. Now, Schiff is a perma-bear on the dollar and has been for years, so take his forecast with a grain of salt. But the underlying numbers on the debt service are real, and they're a big reason long-term rates have stayed stubborn even while the Fed sits still. Here's one for my finance nerds, the Schiller PE Ratio. It measures stock prices against 10 years of inflation-adjusted earnings. It's sitting around 40 to 41 right now. That's roughly 2.5 times its long-run average. And it's only been higher one other time in a 150-year history, the dot-com peak in December 1999. Why do you care about this on a real estate channel? Well, because a stretched stock market and a Fed still fighting inflation is exactly the environment where mortgage rates stay elevated instead of falling. And that's the single biggest lever on what buyers in West Michigan can afford. Now the number that got the headline treatment. The initial jobless claims fell to 187,000 for the week ending July 18th. This is the lowest readings since September of 1969. That's 57 years. On paper, that screams a red-hot labor market. But here's the nuance. June's unemployment rate ticked down to 4.2%, and economists note that that's partially because fewer people are actively looking for work, not purely a hiring boom. June itself only added 57,000 jobs. This is less than half the prior month. Bottom line for us, employment is stable enough to keep buyers qualified and confident, but not so hot that it forces the Fed's hand towards faster rate cuts. Drop a comment down below and let me know, does a 57-year low jobless number make you more confident about buying right now, or are you still watching the Fed? I'll read every comment, so let's talk about it down below. Nationally, the National Association of Realtors reported existing home sales dipped 2.4% month over month in June, but they're still up 2.8% from a year ago. The median price hit an all-time high of $440,600. This is the 36th straight month of annual price gains. NAR's chief economist Lawrence Yun points to job growth as the thing propping up demand and says the real constraint now is inventory, which barely budged. That national inventory story is exactly what we're seeing play out locally, just with a very different flavor, county to county. Here's where it gets local. The West Michigan Lakeshore Association of Realtors, that covers Allegan, Muskegon, and Ottawa counties, just released the June numbers. Median sale price jumped 18% year over year to $400,000. The dollar volume is up 12% to $257 million. But notice the days on market number. It rose 35% to 27 days on average. That's still fast by historical standards, but it's a meaningful cool down from the frantic pace of the last couple years. Active listings are up 8.5% to nearly 8,000 homes. Translation from Muskegon and Ottawa sellers, price is still climbing, but you don't get to skip staging and pricing strategy anymore. Buyers have options again. Now across the county line into Greater Grand Rapids market. Pace is a different animal altogether. GRAR's June 2026 numbers show a market still moving faster than the Lakeshore counties in many areas, with tighter inventory and stronger competition for well-priced homes. That's an important distinction when you're comparing West Michigan markets. The Lakeshore counties are showing more inventory and longer market times, while the Grand Rapids area remains more competitive. For buyers, that means you need to be prepared to move quickly when the right home comes along. For sellers, it means the market still rewards good pricing and presentation. If you're buying, don't wait on a rate rescue. With the Schiller PE stretched and the Fed split on its next move, there's no clear signal rates will drop meaningfully soon. Get pre-approved. Know your number. And in Kent County especially, be ready to move fast on the right listing. If you're selling in Muskegon or Ottawa, that rising days on market number is your cue to price it right the first time. Overpricing in this type of market, that's normalizing. This will cost you more than a slightly conservative list price would. In Kent County, the math still favors you, but presentation still wins multiple offers. If any of that sounds like your situation and you are thinking about listing this year, reach out to me directly. The link is in the description. Or just comment list below and I'll follow up with a free market analysis for your specific street. Quick rate watch. Freddie Mac's 30-year fixed averaged 6.55% as of July 16th. This is up from 6.49% the previous week. A year earlier, the average was 6.75%. With long-term Treasury yields pushing higher following the Fed meeting, don't be surprised if mortgage rates remain under pressure before they move meaningfully lower. That's this week's numbers. If you want a breakdown specific to your neighborhood, whether it's Muskegon, Ottawa, or Kent County, drop a comment or reach out directly, and I'll pull the data for your street. Hit subscribe so you don't miss the next report, and I'll see you then. Take care.